Non stesso invece non è.
Lo stesso invece.
Oi, principal tu. Non questa deve vedere.
Quello non ho. Facciamo. Cosa che può? C'è. Ah, molta. Come vedo il posto? So?
This is budgeting and supply.
Stesso lo facciamo. Iskra.
Yes.
Ian?
Hungary.
Serious?
Do you go to
Oui, si.
Det vil jeg si, I KOP er det ikke.
No.
Ja.
This one is wood. Wood now.
But how is everything? I saw you with Sylvester. Is that a different course?
No, yes.
You will walk around.
Yeah.
We're doing of financial reporting and analysis. I think you're Leipzig.
Ah,
Here. With
oh, what? Let me see.
Leipzig. Yeah. There is look here. It's copied. The answer a little bit. Alright, so we have to start. And start with the introduction to financial analysis. But before everything, I just try to have a quick description as far as what financial analysis is all about. When we talk about financial analysis, our focus is to see how best we can understand or we can interpret the information that is provided from the account section. So, the financial analysis is usually used by the managers so that at least by understanding or interpreting the information presented, it will aid them in terms of decision making. They are likely to come up with decisions that would be good or will aid the business for the better way. So you write to this, what is financial analysis? What is financial analysis? So you write the financial analysis is used to find financial stability, evaluate economic trends, financial policy making for the long term, and evaluation of financial stability, evaluate economic trends, financial policy making for the long term, and evaluation of business, in order to determine its profitability, sustainability, and strength of any quotations. So the analysis will have to be happening in a number of ways. That is, you just try to see what the potential of the business or what the position of the business in its dealings. So you proceed as the analysis of financial reports. And the analysis of the financial reports. As the analysis of the financial reports also means an understanding of the functioning of business decision making, which includes observation, assessment, forecasting, and formulation of diagnosis, all the processes that took place, in any organization, within the organization, summarized. I mean, in any organization, summarized within the financial statement. So, all we are focusing on is to ensure, say, how best we can understand the position of the business by getting the deep understanding of what has been presented in the financial statement. So you like types of the financial risks, So there are two types of financial risks. There are two types of the financial risks. One, you write fundamental analysis, and two, you write technical analysis. So, on the fundamental analysis, much of the focus, we just try to understand probably the impact that the environment would have on the business. So we are focusing much on the macroeconomic factors and the pressure that they do exert on the business dealings. Whereas under the technical, that's where we try to go further and understand what exactly the business has been doing. That is to say, let's take in accounting or in the business and the business plans, we look at, say, the profit making. So we try to understand, say, whatever we are having in terms of resources, assets, how do they contribute towards the profit that the business is aiming. So we start with the fundamental analysis. You heard fundamental analysis. And under fundamental analysis, you have this. So the fundamental analysis gives the perspective. Fundamental analysis gives the perspective of a company's intrinsic value. Here. We thought you are not with that. Fundamental analysis. So in the journey, just start from the text of financial analysis. So we are starting with number one, fundamental analysis. What is it?
That's the first time they made it. The company, I published it.
Do you know what the action has? Ada masuk negara. Okay, fine. So saying on fundamental analysis, right? The fundamental analysis gives the perspective. The fundamental analysis gives the perspective of company's intrinsic value. By examining related economic and financial factors. By examining related economic and financial factors. Full stop. Generally, analysts use this technique. Generally, analysts use this technique. Generally, analysts use this technique to evaluate the major factors that influence, securities value, either from macroeconomic factors, like state policies, environmental factors supporting particular industries, environmental factors, supporting particular industries, to micro factors like companies management. So just as I said, the focus is just to understand from qualitative factors. A good example, let's look at the management. When we talk of the fundamental analysis, we need to understand the capacity or the quality of the management in as far as the status of the company is concerned. How is the management driving the company? So you don't really give focus to any figures or any technical issues. Then you also write this. It is a technique that gives you a better conviction. It's a technique that gives you a better conviction. Technique that gives you a better conviction. To identify companies for long-term investment, and create wealth. Analysts prefer this technique. Analysts prefer this technique to find stocks that are currently trading. Find stocks that are currently trading. At undervalued or overvalued, and then decide a fair market value. Of those stocks to help assign a fair market value to those stocks to help the investors in their investment decision. Here they are. Let's, for example, if a stock is trading higher than its fair market value, for example, if a stock is trading higher than its fair market value, means the stock is overvalued. In the current market. Means the stock is overvalued in the current market. Then the sale recommendation is given by the analyst. Do I ask this question? Here, what's the minimum school fees? Alright. Let's look at types of fundamental analysis. First, you write qualitative analysis. So it includes the quality of company's executives. It includes, I think, qualitative analysis. So you write it includes the quality of company's executives. It includes the quality of company's executives, vision, brand name recognition, patent and proprietary information, technology, full stop. Generally, it is related to the nature of business. And standard of organization, rather than sticking. As in general, it is related to the nature of business and standard of organization, rather than sticking to its quantity. Then you have quantitative analysis. And under the quantitative analysis, you have quantitative analysis of financial statement is used to understand company's financial performance. quantitative analysis of financial statements. Quantitative analysis of financial statements is used to understand companies' financial performance better before making an investment decision. Before making an investment decision. The three most financial statements being used. The three most important financial statements being used for quantitative analysis. Are income statement, balance sheet, and the cash flow statement. Is that right? Alright, then we jump to something. We had fundamental analysis. Now go to the second. We are going to technical analysis. So, they write, on the contrary, in technical analysis, on the contrary, in technical analysis, analysts evaluate the investment opportunity. Analysts evaluate the investment opportunity by analyzing past statistical trends, such as volume and price. The technical analysts assume that prices of the stock. The technical analysts assume that prices of stock are more likely to follow. The past trend rather than move strangely. So in this case, what have you found? I'll say technical analysts assume that prices of stock are more likely to follow the past trend. Rather than move strangely. That's why in this course or in this unit, we also see how best do we interpret or understand the trend analysis. So you look at it's like the pieces to follow will follow the behavior trend that has been happening in the past. We do perform trend analysis in a number of what? Economic functions as well as accounting functions. Then we proceed. In stock market, everything is related to market psychology. In stock market, everything is related to market psychology. Is related to market psychology or market emotions, comma, or market emotions, comma. Technical analysts use past data. 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 Charts to analyze, use past data charts to analyze these emotions, and market fluctuations. These emotions and market fluctuations. These emotions and market fluctuations to better understand trends, related to stock, to better understand trends related to stock, to better understand trends related to stock. Technical analysts believe that the fact that history will repeat itself. Technical analysts believe the fact that history will repeat itself, and we can better understand the opportunities to invest, and better understand the opportunities to invest if we understand the past patterns, opportunities to invest if we understand the past patterns or trends. With the right. However, fundamental analysts and technical analysts, there should be analysis, not analysis. Fundamental analysis and technical analysis both needed to make an effective market strategy. Right? So in this case, we have seen, how best we can perform analysis, or how best we can understand what's happening in the company, so that as we are able to make better or good decisions. Now let's see, you write, how is financial analysis used? How is the financial analysis used? So in that, our test, we start with corporate financial analysis. Corporate financial analysis. And under corporate financial analysis, we have this. This analysis is done by the companies. This analysis is done by companies' internal financial analysts, like the accounting department, and then share analysis report, and then share analyst report, and then share analyst report to management, analyst report to management to make better decisions, Full stop. This analysis include ratios like net present value, and internal rate of return. So when you look at the net present value, internal rate of return, you find that these are ways we try to analyze the financials of a particular investment that an institution would like to make. So in short, you need to choose somebody who is at least who is technical on the way of accounting. Then you go to the second, you write investment, financial analysis. Investment, financial analysis. And other investment, financial analysis, let's have this. In this, an external analyst. In this, an external analyst. In this, an external analyst analyzes business. In this, an external analyst analyzes business for investment purposes. Generally, analysts conduct two major approaches. Analysts conduct two major approaches that are top-down or bottom-up. Top-down or bottom-up. We'll stop there. In top-down analysis, all the macroeconomic factors considered before, investing, like which sector have the potential, to grow. Then they come down to the best companies, and they come down to the best companies in a particular sector of investment. So you try to understand the industry first, then you go to the company that you better invest. Then you go to bottom up. So like in bottom up analysis, analysts consider microeconomic approaches, and start with a specific company, and start with 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 specific company, and then conduct racial analysis, the same as corporate financial analysis. The same as corporate financial analysis. The same as corporate financial analysis. With the right? So let's see. Key areas of financial analysis. Key areas of the financial analysis. And on key areas there of the financial analysis, right? Number one, income statement. Income statement. Two, balance sheet. Two, balance sheet. Three, cash flow statement. Three, cash flow statement. Right. Let me hear from you. We start with the income statement. What's the income statement all about? And what kind of things do we need to analyze them? We start with Mr. Martin. Moses Bigman.
Income statement. I think it's focusing on
On what? Income statement, what does it do? So as the income statement, we look at expenses and income. So all we are looking for is to see what's the income of the business all about and what are the expenses. So in the first step, generally, we try to understand, say, the business does make the income through sales, right? Like here, the school fees you're paying, the institution is considered them as what? The sales they're making, okay? Then we also find say there are a number of expenses that we are doing. So we also try to group these expenses. Say, are these expenses operating in nature? Are these expenses training and all those kind of stuff? So that at the end, we should be able to, the analysis should be some sort of look at the profit that we have achieved. The question is the profit relevant or not? So the relevance could only be discovered or understood if we analyze what we have actually done in the course. Alright, let's start with number one there. You start with the income statement. So you write income statement. Income statement. And under the income statement there, right? Income statement basically shows. Income statement basically shows. Income statement basically shows that the company's performance. Basically shows the company's performance in terms of financial gains. Shows the company's performance in terms of financial gains or business profitability. Financial gains or business profitability. Financial gains or business profitability for a given period. For a given period of time. For a given period of time. For a given period of time. For use this report to predict the company's future performance, and potential future cash flow of business of the business. Income statement also refers to as the profit and loss statement. Profit and loss statement, statement of earnings. Yes, someone here?
No.
Okay.
Yeah.
Statement of earnings or statement of operations or statement of operations.